this week that will give us some indication on how the country's economy is faring. The big one out tomorrow is gross domestic product or economic growth for the second quarter. Market expectations are that growth slid in the period to 2.0% from 2.1% in the first quarter. Producer inflation is also out this week, as well as mining production. This all comes when the rand is hitting 14-year lows against the US dollar.
China's move to devalue its currency last week was arguably the beginning of the mayhem seen in the markets today. The devaluation of its currency signaled to the world that not all is well with that economy's growth. That's bad news for commodity exporting countries like South Africa, given that China has been the foremost consumer of commodities over the past several years. Emerging markets, including South Africa, saw their currencies hammered this morning as sentiment turned negative.
The rand is actually falling in line with other emerging markets currencies. The Russian ruble is softening. Turkish lira is softening. You're seeing weakness as well in the Brazilian currency, and the Indian rupee also is weakening.
If the rand consolidates at current weak levels, not only could it have inflationary impacts, but it could cause havoc for the government and other state agencies to get and pay back debt.
Our national debt has increased to another 42% as a total of GDP. That brings in a lot more questions as to whether we can continue to collect revenue of 1 trillion rands and pay interest of about 120 to 130 billion out of the tax revenue that we collect. Because this is money we should be collecting to use to develop the economy. But we're collecting this money and we're using 13% of it to go and service debt.
Meanwhile, economists are not optimistic that GDP figures out tomorrow will register anything more than 2% growth. This because data over the past months for various sectors has shown a deterioration in growth. And with the rand weakening, which could stoke inflation, there are worries the Reserve Bank may feel compelled to hike rates in an already poor economic climate.
It's a very difficult spot where the Reserve Bank would find themselves in at the next MPC meeting, because on one hand we do foresee a very weak economic growth year. If we incorporate our current forecast for quarter two, we will be lucky to get to an annual growth rate of around 1.6, 1.7 at best. Taking in consideration on the other side that inflation, although the rand might push it a bit further upwards, will probably only average around about 6.1, 6.2 next year, which is in my view not a train smash for an economy that is struggling to grow, especially if you look at the consequences of job losses and so on. That will be catastrophic for South Africa if we continue to grow below our potential.
June mining data will also be out tomorrow. While the figure is unknown, it could be a game changer, either positive or negative, for the overall GDP picture, also out tomorrow. Nompumelelo Siziba, SABC News, Johannesburg.